So last week, we warned everyone that December would likely be volatile to prepare for a correction, which we are getting right now. And so I want to provide the structure that I think is playing out and give you an idea what to expect going to the end of the year. Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. And this is our weekly video where we take a look at the broad market so that we can get a better idea and just get some context on what might happen next. So last week, we warned everyone that December would likely be volatile to prepare for a correction, which we are getting right now. And so I want to provide the structure that I think is playing out and give you an idea what to expect going to the end of the year. So the move off the low, as stated prior, is this messy overlapping structure. It could be counted as the first big wave in a new bull market, or it could be the first wave in just a very large bear market rally. We won't really know which is playing out, nor will it really matter until, I think, early 2023, when we start getting up into the 4,300 range in the S&P 500. So I think the high probability move is some kind of a low relatively soon, followed by a move higher, either into early 2023 or the first month or two into 2023. So this is the structure I think we're playing. We got a nice corrective rally, A, B, and this is your C wave that's completing right now. And if we take a look a little closer, this is the structure of this correction. And so far it's playing out pretty uniformed. We have a three-wave move off the top. That's your A wave, a corrective rally with the blow-off B wave into the CPI reading. And then since then, we have a nice 1, 2. Today was clearly your third wave. You get a gap down, big move in momentum. This is what a third wave feels like. And so what I think we're going to see next is a bounce back up into your 3,920, 3,948-ish, and then turn back down for probably the 3,800 region. I think 3,850 is a level to look at. If we break that, then 3,800, lows or high 7,900 is where we will be looking for some kind of a low. And we think that's already starting to set up right now. We're already getting some negative RSI reversal signals, which is very common for a fourth wave. What that means is the momentum is making a higher high while price is making a lower high. Very common in corrective moves. And this is incomplete. We only have 4 waves, or really just 3.5 if you ask me, down. So we need that final 5th wave to complete. And those are the levels we're looking for. Now, what does that mean for anyone who's trying to play this? Is to try and keep it as simple as possible. This is the text I would follow. We get down to 3,800, we'll be looking to deploy more of the cash that we raised over in here. We actually started today. And if we do get a big rally, a continuation of this bounce off the October low into this 4,300 range, around there, into early 2023, January, kind of the first and second week of January, there's some really strong cycle clusters. So if we're moving up into that, this is the action we're taking, raising cash, hedging, because we won't know if this was the end of a big bear market bounce or just another pullback in a larger bull market until we pull back from this region. And we think the wise thing to do is to assume the worst. And so that's our game plan. And so far it's playing out quite well. One positive point is the Dow. We've been talking about this for several weeks on this channel about how value is now the new leader within the market, that a lot of growth names are looking quite weak. There's some very strong value-oriented tech names that have good catalysts. They're actually leading this market, but it's a lot more discerning than prior years. But the Dow, to me, is setting up for a really nice move. And this is going to be one of the moves I'm looking at right here. I think that we broke out above the 200-day, which is, let's see, we'll go to broke out above the 200-day, and we're testing it and kind of hovering around it. But as you can see, we bottomed right on the 38.2 extension right here, which constitutes a shallow B wave. I wouldn't be shocked if the S&P makes a lower low and the Dow makes a higher low, that it holds this low and then turns back up. And when the Dow gets to this level right here, 16,963, around there, is when we're going to start looking to be pretty cautious. This would be your bullish scenario, is once we get that bigger pullback that holds the low, then we take off into 2023. So we'll have to play it step by step, really. But that's our game plan. We hope that really helped and provided some context. And I do this video every week on our YouTube channel. You can sign up below. We also do in-depth fundamental and technical analysis, institutional style analysis on the tech sector, as well as in some crypto coins. And you can sign up there at iofund.com. Thank you very much. I hope you have a good week.